Stock market today. Analysis for Thursday, December 29th, 2022. Second to the last trading day of this year. We're currently looking at the futures. We're going to break that down relatively quickly. We'll go through and look at some overall general markets. Then we'll look at the 12 main sectors of the stock market. After that, if there's some time left over, then maybe we'll look at some other things. Before we get into that, I want to draw your attention to the mission of I Have Success. The mission of I Have Success is to help you begin your trading journey by learning how to sell cash secured put options in a way that allows myself to grow and improve in the process. There's a link to the I Have Success website in the description of this video. There are 3 different playlists. A great place to start is with the one that says beginners in all caps. And overall, in 2022, going into 2023, if you have an internet connection, you have a bank account, and you spend money at least once a year, there's 0 legitimate reasons why you should not be selling cash secured put options. Instead of continuing to elaborate on the importance of that and all these different things that you can get at the website and help you out with, a playlist, and just like this link that's popping up right there, what that video is about, which you can watch it. Just remember it's at 2-minute mark. You know, all that stuff. Go back and watch that if you'd like. Let's get into these markets. And anywhere I can, I'm going to kind of throw in some particular places where I might look at selling options, not on a particular underline, but just looking at the chart, the pattern, and that type of thing. So you have to understand that it's not financial advice, it's not recommendations. You got to make sure everything's suitable for you, and especially when I talk about selling options at certain places, it is actually not on that underline, whatever underline we're looking at. We're just looking at a lot of charts, right? And ultimately, I sell a lot of options, so I kind of have my eyes trained to see where there's support, resistance, where a stock is not likely to go. So anyways, let's get into it. Here's the VIX future. We see the VIX future, that 200-day moving up. And if you don't know, this chart shows about 1 month of data, and each candle represents 1 day. So we see this 200-day moving average sloping down. We're below a down sloping 200-day moving average. The VIX future is coming back here to about this, almost hitting this 23. Looks like this. See where you have this big spike up, and then so we had this red candle here, a big spike up, pulled back to about here. The next day or whatever time frame this future opened here, right where this one closed. You can see that wide part of the body, and then sold off to here. And it's been kind of trickling down. And it seems like maybe some of that momentum of selling is slowing, and we see this that 32 seems to be kind of like a support area right there. So if I was selling something to the downside, just by looking at this, I would possibly look somewhere under this 20 area. Now that's 1 month. If I'm really going to put my money on the line, I'm looking at a 10-year chart on the monthly, 3-year chart on the weekly, and then 6-month chart on the daily, and then even kind of trying to fine tune it more with an hourly chart for 5 days. And then I'm going to look at a lot of different volumes at different places. So there's a lot more going into it, right? This is just for educational purposes, looking at this. Like, where do you see support? Where do you see resistance? Right here, it seems to be going kind of sideways. It seems like right in here had a lot of resistance. and then it kind of bounced up here, but now it's coming back, so maybe it's going to fall below. Seems like right in there. And then ES, which is the futures for the S&P 500, downward sloping 200-day moving average. We're below that. We see overall it's been moving down, and I'm thinking about tonight on a paper trade, seeing if see if I can scalp some short position on here. If it starts moving down, that's what I might look to do. See if it's going to do the same thing over here. Kind of move down. It dropped down here, popped up here. I want to see if it's going to float back down. And this one is of the Dow Jones. You see the Dow Jones, it's above its sideways moving 200 average, and kind of going down. With this one right here, it's got a bit of sideways for the last week or so. Same thing here. It was started going sideways here, popped up just a little bit, but it seems like we got a kind of sideways range right somewhere in that area. NASDAQ below that downward sloping 200-day moving average, and yeah, just since about right here, it's been going down relatively nicely. Where look at this M formation, and it really followed through. Here is a very looking like a clean M. I know you got this big tick up there, but look at this right here, drops down, and then you could say, you know, hindsight's 20/20, but you could at one time you could once it dropped down here, you could say, hey, let's see if it's going to break this. Boom, the next day it doesn't. It goes up, it goes up, it goes up, and then you're waiting to see if it's going to break this to the upside. But oh, yes, it is going to break it. No, when it finally closes, it's down here. The next day, oh, is it going to break it? No, it closes here. Day after that, woo, it really drops, and then maybe you could watch what's the next day going to do, because if it breaks this kind of 1150, it might go down even lower. And sure enough, that's what it did. Now it's easy to be 20/20, you know, quarterback. It is much harder to put it into real time. So get a paper trading account and try it out. But if we were selling, if we were going forward, if we're going to be selling, you know, the other thing that I forgot to say on this one, you know, selling puts down here, but how about selling calls up here? How about selling calls up here? Is it possible to do that? Maybe. Is there premium up there? Who knows? But definitely, even this, when it's below a downward sloping 200-day moving average, below a downward sloping 200-day moving average, you have more of a probability of it continuing to go down. So if you can get some premium, you know, sell where it's least likely to go to, which would be up in this case above the 200-day moving average. Especially this one, like that's got some room. You know, if we're looking at if we're selling something, let's say at 1250. Now again, I don't know if there's any premium there, and you know, these are futures. I don't even know if it's a wise move to sell them, and it's not about whether to sell it on the NASDAQ or not. It's just looking at this theoretically with the 200-day moving average and these candles that we see. So before it were to get to this 1250, it definitely have to get past this 1125, right? And we see a little bit wherever that is, right in here. It seems like there's some resistance area. This 1150 area, it'd have to get past that. Then it'd have to get past this 1250. So it's got a lot to move through before it, boom, could get through the 200-day moving average. Russell 2000 below that downward sloping 200-day moving average, and not as clean coming down as this, right? Look at how kind of choppy that is. So that choppiness, I'm sure you could figure out something to do with it, but we see that it's kind of similar look here. It's not as clean as an M, but we see where we had this left-hand part of the M lower than this part, you know, breaks here, kind of doesn't really go down that much lower. Kind of, it did go down lower, but it's just been moving sideways. 10-year treasury yield pulled back a bit today, future for that, and we were talking about this yesterday, I think the day before, about this potentially W pattern here, and to see what's going to happen at this 3.8 area. So look at this. Isn't that interesting? It popped up above that 3.8. It kind of pulled back to this 3.8. Now it's opening right above that 3.8. Let's see how this candle closes. It's probably going to close, I don't know, tomorrow morning sometime, my time. I don't know what time zone you live in, so But when this candle is done, the candle for 12:30, and look at this, it's only 12:29 here. I'm in the future. I'm seeing the future right here. Crude oil below a downward sloping 200-day moving average, and we see is that gonna form some kind of W? It didn't really make it, right? Here's this part of the W, pulls up, pulls back, left hand lower than the right hand, but look at here, kind of fizzled out. Maybe it's trying to do another one. We'll see. But we really got to get above, somewhere above this 80. What is that, like 82, 83? You know, somewhere in there. If it's got to really break above that for, like, that's, I guess, the nearest resistance, you could say. And so, you know, if you wanted to have more risk, you could potentially sell an option. Hey, you sell it over here, not a big deal. You sell it, you know, down here, you're running more risk. You could potentially sell something down here, right? Because it's got to kind of break below this. Not kind of, it's got to break below that, and that's just kind of a little bit of support there. And this pivot point showing us that when prices get, in the last month, when prices got down to this area, buyers are going to step up. And so, yeah. But it could be people shorting here, you know, buying back. I don't know, combination of both. So those are all potential things. Again, especially if you're watching this video, more than likely you're not in a position to actually be putting live trades on any of these futures. So we're just looking at these candles, you know, and the 200-day moving average, and we're just kind of looking at what's going on with the future and potentially talking about, you know, how to look at different arrangements and see where, try to get your eye trained to seeing some support and resistance. Natural gas, the widowmaker. You see right here, look at that. Once it fell below the 200-day moving average, pivoted right here, buyers stepped up, got to this 200-day moving average. Look at this. It's just like can't break above that. Wears out all of its energy trying to get above that, comes down. And when you see it break this, right, it gets down to this area here, boom, sells down. Look at, some buyers stepped up. Maybe that was short covering, maybe who knows exactly what, but we see prices get kind of sticky around here. Prices got sticky around here. And then when it broke that, oh, rallied up a little bit. It came back down. Gold, look at this. Look at how that's just clumping up in there. Wow, isn't that amazing? And look what seems to be happening, all right? It seems like, look at how this is sort of, see that kind of diagonal line going up and how this is kind of staying flat across here. So sometimes when this happens, it pushes prices to whatever side is staying flat. And so, you know, where might you have a safe bet of selling options on this one? I don't know. I guess for me, I'd probably maybe look down here. I'd try to probably sell something down here. So it's got to go past the 200-day moving average. It's got to go past this 1780, and then even, let's see if I can sell all the way down here past this 1760. On the upside, you know, we see it touch this 1840 or 1841.90, whatever. So maybe somewhere up there, you know, potentially candidate for maybe a strangle iron condor, something like that. Okay, silver. Silver, you got one. We got a similar thing. Touched this, broke above this 200-day moving average, and has kind of been on a bit of a run in the last month, but it's kind of petering out here, right? It's losing some momentum after around here. Sold off, build some. Okay, so look at this. We got a pivot here. We got another pivot here. So overall, we're still in a bit of an uptrend because it hasn't you know, hasn't even came back down to test this area right here. So maybe it's still an uptrend. It's in the last how many ever candles this is definitely moving sideways, but it's moving sideways a little bit higher than down here, right? It's moving sideways up here, and maybe there's a case to be made that we keep getting this low, higher low, higher low, but our highs, same thing. So maybe we'll see prices push to the upside. These two, though, silver, gold. These are, I consider these political metals. So there's more going on than the general, than just general supply and demand and normal fundamentals. Bitcoin, futures of Bitcoin. Look at that downward sloping 200-day moving average, and just kind of doing what it's normally doing. I listened to a pretty good interview on Kitco with Mark Moss today. It was about 47 minutes long, talking about Bitcoin and other cryptos, and I think it's worth listening to. I tolerate the Kitco people. They're definitely not entertaining to me. They're just tolerable, but some of their guests I like to listen to. I just don't particularly care for their style. If they change, then I'll change my opinion for better or for worse. Look at the overall markets. Now these three right here, we already looked at the futures. UUP representing the dollar. Okay, still we see overall like our long-term trend defined by the 200-day moving average, that's sloping up, but we're below that. And this is a lagging indicator. It's measuring the average, I think, close price of 200 days. So, you know, it's a little slower to change. So it's going to have to stay below 200 days before it starts moving down. But nonetheless, this is upward sloping. And we're only looking at 1 month of time frame. Also, just like gold and silver, this is the dollar. You know, it's a totally political thing. And so there's a lot of things past normal fundamentals that could be done to move this up or down. But a couple days ago, I was kind of drawing this channel, and what I noticed today, we'd have to look at go back like another week or so to see what's going on here. But look at this, how it drops down. It kind of does this weird sideways shape, and then it drops down, and it kind of does that weird sideways shape, and then it drops down, and it kind of does that weird sideways shape. So it seems like we could be in some sort of continuing in this downward channel with a sort of stair step type down thing. And generally speaking, when you have the currency that you transact in losing value, things that you're purchasing go up in price. Right? So if your dollar that you buy milk in is less valuable, it'll take more dollars to buy that milk. Which is, in my opinion, a good thing to be able to differentiate. Is the value of the milk going up, or is the value of your currency going down? And if so, maybe being an investor, a trader, maybe you should just be aware. Would it help you? Would it behoove you to know when something is actually gaining value, or if it's the currency you're using to buy the thing is losing value? It might be of your benefit, because maybe if all assets are going up because the dollar is going down, maybe you want to be aware that it's not all assets going up because they actually are increasing value, and maybe you want to look deeper and figure out where the value is before you put your depreciating or losing value fiat currency into an asset that might actually not be going up in value. It might just be going up in purchase price, versus you get something that actually is going up in value and it's going up in purchase price. And there's probably more than one way to skin that, but do whatever you want with it. TLT representing 20-year bonds. Where would I sell something on this? I don't know, maybe like draw some trend lines here, considering like right outside of like if it's like maybe right here would have been a good time if I was feeling somewhat confident that that is indeed what's going on. It's going to hit this top of the trend line and go back down. Maybe I could sell there, and then when it hits this bottom, it's going to go back up. Maybe we could sell there. I didn't talk about selling like a cash secured put option, but this isn't something that I would probably want to buy in that regard, being UUP. But again, going back to that, that's not what we're talking about. We're just looking at these charts, and when I'm talking about selling these options, we're not even considering what these are, what the numbers are, and if it's even viable for the account or whatever. We're just looking at charts and talking theory. So you could probably sell some options over here. Potentially down there. That would be the safer bet. But TLT, we see it's below that downward sloping 200-day moving average for a while. Whatever TLT's been doing, the stock market's been doing. So overall, it's kind of been going down. Stock market's kind of been going down. We'll rally up today, a little rally up today on that. And I want to take that to the bank. I want to bet if you have a farm, I want to bet your farm on just this. I would look at more indicators than just what just to think that whatever TLT is going to do, the stock market's going to do. Well, we see here around this 102 area, see where it got boom, boom. And then here it seemed to stay above it, touched it here, and then it really gapped down. It seemed like that might be kind of a theoretical line in the sand for whatever side it's on. Where would I sell something? I'm probably looking at see if I can go 110 or higher. I don't know on the lower side. Probably go 110 or higher, maybe 105, depending on how much risk I want to take. Yada yada. We already looked at gold, looked at Bitcoin, looked at crude oil. The VIX. The VIX has dropped down, and VIX dropped down today. But look where it closed yesterday. Look where it opened today. It basically went sideways today. Just kind of. But we're going sideways a little bit higher. Low, higher low, higher low. And look at that, sloping down, kind of sloping up. Right, you see that? If we could draw a line like this, just looking at this, we have a very limited amount of data, right? We have about a month of candles, and we have each candle representing 1 day, and we got a 200-day moving average. So seeing that, we talked about if it's kind of going flat, and maybe it is. Maybe there's a case to be said that this is an outlier here. These are outliers, and if you remove that, then you got a flat, flat right here and pushing up that way. That's potentially one argument that someone could make, and so prices could push up. Another argument someone could make is that you got this sloping down, you got this sloping up, but we're under a downward sloping 200-day moving average. So maybe maybe it's gonna help push things down to the downside. Again, it's all probabilities. I think it's all probabilities. There's no super as far as I know, there's no 100% accurate way to do it. That's why risk management, adjustments, proper size positioning, and all that type of stuff becomes super important. And just for me, what I'm trying to do is put the odds of success on my side. SPX. All right, so if this is down, we should think that these four are going to be up. SPX up, Dow Jones up, NASDAQ up, strong bull candle up on the Russell. 1 day doesn't make a trend though, does it? It might make a trend in the day, but it's not making a trend in the month. We see down, 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 down. So I'm hoping over the next couple days, these are going to keep going up. I'm hoping this is going to drop all the way down to 20. And if you've watched that selling options with the VIX, I'm going to sell myself. I'll sell myself an option when it hits down here at 20. What strike price? What underlying? All that is for me to know and you to never find out. You got to find out, your own. You got to pick your own stuff. You know what I'm saying, my friend? You got to be able to do it for yourself. Well, you don't have to. You can rely on the suspect opinion of other people. A lot of people do it. But over here at I Have Success, we're not for that. We don't stand for that. We're against that. We're anti have someone make decisions for you. We're anti that. We think that is debatably the root of all evil. Wanting someone else to make decisions for your life. Get some responsibility, my friend. Step up. Be an adult. Make decisions for yourself. and try to make good ones. And if you make a bad one, be accountable for it and correct and go forward. All right, so if I was going to sell an option over here, where would it be selling? Depends, you know. A lot of it does depend. Because what if I wanted to buy this? Maybe I'll sell a cash secured put option over here. What if I didn't want to buy it? I'd probably look at selling something up here. I would try to at least see if I can get any premium up there. And on this one, maybe I'll sell below the 200-day moving average. But I know that this is connected to all of these. So you know what? If I didn't want to take assignment, I'd probably try to sell up here. And then same thing over here. Same thing on all these. Really. Let's take a gander at these 12 sectors of the stock market. Boom, downward sloping 200-day moving average, downward sloping 200-day moving average, downward sloping 200-day moving average. So we got 1, 2, 3, 4, 5, 6. Half of these things have a downward sloping 200-day moving average. But look at this one. Boop, XLF just popped up above it, financial sector. Downward sloping 200-day moving average, below it. 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 Okay, this one, we'll see. We'll see. Hey, you got a lot of weight. You got a lot of weight pushing against you here, right? Look at this, above the 200-day moving average, above the 200-day moving average. But look at that. Okay, it's sloping up. This one's sideways. This one's sideways below the 200-day moving average. This one's up. So we got one sector above the 200-day moving average, above a upward sloping 200-day moving average, 2 sectors above an upward sloping 200-day moving average. And that's it. So if we're peeling back the covers and looking at the different sectors that make up the stock market, and we're just doing a quick and dirty math calculation here. There's 12 sectors. If we're looking for bullish or bearish, 6 out of 12 are below, okay, this is above. We could say 6 out of 12 have a downward sloping 200-day moving average. 2 out of 12 have an upward sloping 200-day moving average. Everything else is sideways. Where would you, if you're playing odds, where would you bet? And then we can break it down into more detail, analyzing stock charts. But we already did a lot of that. But you look through here, yeah. So we can break it down more. But sometimes it's just kind of depend on what's going on and what your situation is. You might analyze it more. You might analyze it more or less. What I find for myself is that if let's say for a few months I don't pay attention much to the stock market. Maybe I'm just selling cash secured options and covered calls. So I'm really not caring, right? Because I'm just like, okay, I'm okay buying the stock, I'm okay selling the stock, and then once I start paying attention, it's like I start getting in rhythm of knowing what's going on with the market, and I don't have to keep analyzing as much and kind of quickly, look at it and glance. And you know what? Tomorrow it's the end of the week. I'm going to be doing we're looking at the weekly charts, so maybe Monday, Tuesday, Wednesday, I'll take a little closer look. So should we take a quick look at interest rates? Why not? 10-year yield went down a little bit today. This is not showing it super accurately though, because this chart is on a week. All these charts are on a week. But yep, we see over the last year, stock market's been going down. The interest rates on the treasuries have been going up. These ETFs, this thing is 1 to 3 years. This is like 5 to 7, 3 to 5, 3 to 7, stuff like that, 20 and 20 to 30. So why are these going down? If these are interest rates, why are these ETFs that represent these treasuries going down? Because there's 2 different things happening here. So I used this example yesterday. Think about a job. Think about it's a job that nobody wants. You got to pay people more, right? The pay increases as the desirability of that job decreases. Got it? This is people buying that asset. This is them raising the reward You got to sweeten the deal, right? Let's say if nobody wanted a McDonald's, they'd have to lower the price of the McDonald's. They'd have to raise the amount of money that the franchisee got. So is George Gammon and Jeff Schneider going to argue that? Of course. Are we trying to do the same thing they're doing? I don't know if you are. I'm not. I guess we are as far as trying to make money. But look, what's your good buddy Brent trying to do? For the most part, I'm selling cash secured put options on stocks I don't mind owning. Some of those stocks I'll sell covered call options on if I get assigned close to the money, so I can I get a bigger chunk of premium because I'm selling close to the money, and then I don't care. Like if I sell a covered call option here and the stock runs all the way up there, I don't care. I'll just keep selling covered call. I'll sell cash secured all the way up through this. I don't care. Other ones I do care more. I want to keep them long term because I like the fundamentals of the company. They pay a good dividend, and I want to reduce my cost base. Say I bought it for $5. Every time I bring some dividends, every time I sell covered call premium, it chips away at that $5. I bought it for $5. Okay, now I brought in 50 cents. Now my cost base is $4.50. Now I bring in another 25 cents. Now my cost basis is $4.25. Once you drive your cost basis, as you drive your cost basis down, your yield goes up. So if let's say you're getting 10% return on your investment at $5, when your cost basis goes down to $2.50, you've doubled your yield. Now you're at 20. What happens when you go down to 0? What happens when you pull $5 out of that? I know the answer, and I think you know the answer, but if you don't, Google around and see what you guys can figure out. With that, consider again going to ihavesuccess.com. If you like this mission, consider supporting it. There's your good buddy Brent right here. There's things you can download. I'm working on making more stuff, and I'm working on other things, and I'm just kind of a workaholic. So you guys have a fantastic day. Aloha.